So this is just some quick analysis on the major crosses. So I'm going to start with the EURUSD. Let's just have a look here. I'm doing a recording on my tablet because the one I recorded on my phone didn't come out as I'd liked. So let's have a look at the EURUSD, and as we can see, we've come down into this region down here. Come into this region down there, and yep, the market has found support. It's touched. Now it's come up. This is on the monthly chart. As we can see, it's sold back down there, but we might encounter some resistance in and around this area here, which is the 120, the early part of the 120s, 122. We've also got this moving average up here on the monthly chart, so it does look bullish on the monthly chart. We go down to the weekly, and let's see, again, it looks bullish on a weekly, but if you look at this week, it is below the open. So if it's trading below the open, you could say there's a medium interval. It's an interim term, bearish in that sense, because it's trading below the week's open. But obviously you're gonna have to expect pullbacks in a larger trend. So yeah, still looks bullish, but obviously onto the open, it is weak as it is trading below the weekly open. If we go down to the daily chart, as you can see, we're respecting this moving average here. We've come back down to it, so it's almost like a mean reversion. It's come back down to it, and he's actually touching it, so we might get support like just here and here and here. So we're still looking for buying opportunities. If you're looking for a buy on the daily, you might just want to wait until you get a bullish signal. So wait through this pullback, or you want to wait until there is a close above this high here. That's what I'll be looking at the end of day. If it closed above the high there, I'd put this stop at the low of the candle, or the 3 period low. If it closed above that point there, again, if I do get a signal, we get the chart bigger. If I do get a signal, I'll be looking at taking this long. If you're going down to the 1 hourly time frame, you would be looking at, let's see what we're doing on the 1 hour. We seem to have had like a, if I get my, get the brush out, we seem to have had a double bottom in and around there. So it does appear to be pushing back up. Now you might be looking at, this is not going the way I wanted it to go ideally. And this brush is annoying me somewhat. But yeah, you should be looking at a target somewhere in and around that region there. Let's see. Let's start with an eclipse. Let's try that. So somewhere around there, you'll be looking at possibly encountering some resistance, pretty much because of that weekly swing off that 1910 level and this moving average here. We also might even push all the way up to, where's that level there? 1949. That's on the 1 hourly. And let's try go to another pair. So that's it for EURUSD. We've had a bit of a pullback, but still expected to be bullish. Still expected to be bullish if given a signal. But as he's trading below the week's open, I would likely not be looking at executing any long trades. Now, let's see. If we go over to the pound USD, as you can see, it seems to be symptomatic of dollar strength at the moment, as we've had a bit of a brief sell-off in the pound. Why is it bringing me to a EURUSD chart? Okay, so obviously I need to change it there. And it is a pound USD. And let's have a look again. That's the 4-hour time frame. Let's have a look at monthly. On the monthly time frame, well, it is come back up off the lows, but it does appear a bit, it's like it's going to a consolidation just there, around that 130 level. Obviously on the monthly target. Obviously, in the monthly time frame, the target will be the 134.29. So it is coming up off the lows. That we might see a bit of consolidation before a further move up, or it might come up, touch that level, and sell back down before moving upwards again. So let's have a look at the weekly. Let's see where we are. So we've had a strong move upwards last week, and as you'd expect after a strong move, you would get a bit of a consolidation as the market kind of pretty much has a little rest. It's like pretty much like mountain climbing. It has a bit of a rest before it continues upwards. But on a weekly time frame, you're looking at this, and let's see, you're looking at, oh, forget this. Let's delete that. And what you've had is we've come down, touched, and we've moved up. We've had a higher low there. We've had a higher low there. So as you can see, the market does appear bullish in a sense on a weekly time frame, especially after a strong move last week. We've traded above the week's open for the majority of the week. So yeah, it does look bullish on a weekly time frame. So if you go down to the daily, again, it's come off yesterday, but it's not something you wouldn't expect. So we closed above, pretty much closed above those highs there, had a bit of a pullback. So you're just waiting for an opportunity to go long. So a strong bullish close. You could say there's an opportunity to go long. I'm going to stop below that moving average there, which might provide some support. And you'll go down to, say, the 1 hourly time frame. And you wouldn't, I wouldn't anyway, I wouldn't take this as a possible buy. There. I need to see stronger closes. I'd have to see candles similar to this one here for me to look for a buy. But again, we might find an opportunity in and around might find an opportunity to go long. Let's get this moving. You might find an opportunity to go long in this region here. Find an opportunity to go long Yes, I keep it there. Might find an opportunity to go along in this region here, in between where I just put those two trend lines. And the market, I wouldn't think would pull all the way back to this moving average, but you could possibly do that to find support to then go long. Again, you'll be looking at the ATRs to set your stop. And let's come off that a bit. Let's delete that. So we're looking for long opportunities on the pound, even though the monthly appear to be in this it's not just moving average. It does appear to be in a bit of a consolidation for a little while there, but yeah, it does look a bit bullish despite the sell-off yesterday, which was some dollar strength. It still does look a bit bullish, and yeah, that's it for the pound USD. Let's go have a look at euro pound. So we've had pound strength, euro weakness in a sense. So if we go to have a look on the monthly chart, as we can see, the euro did come down against the pound, but obviously this was 2015-16, no, mainly 2015 really, 14 to 15, in and around that region there. And as we've seen, the euro has been recovering against the pound. On a monthly chart, we're trading below the open. We are currently 14th of September, so we are currently below the open, which is pretty much bearish if we're trading below the open. Yeah, so it's into an area where we've had swings and likely on a weekly chart before. So it has been trading below the opens, the monthly open, so we do expect some weakness, even though the long-term trend was to the upside. The monthly chart and the weekly chart, again, we're trading below the open. As we've seen, the prices come up. Had a bearish candle, second bearish candle. That's 2 weeks in a row. This is third week, which it seems to be selling off a lot more than it was the previous 2 weeks, which appear to be pullbacks. Again, you should expect market pullbacks. It might just pull back to this moving average here, which is around the 87. Let's see where that is. It's around 88, around the 88, 90s, which would obviously be close to these areas here where the price is reversed, which may act as support. So in the 88, we might find some support, but as we're trading below the weekly open, we do expect to take bearish signals. If we go down to say the 4-hour time frame, let's have a look at that. And well, you would have went short off this candle here, but that would have been on the 8th, which would not have been this week, and you wouldn't have had a signal since. So that's the thing about the 4-hour time frame. Let's have a look at the 1 hour, see if we could have been able to get back in on pullbacks again. You would have been looking at, let's see, again the 8th there, where it's bounced. It's sold off this, the blue is a 200 moving average, it's sold off there. Again, you'll be looking at the possible entries. You would be, let's just have a look at this. Possible entries, you would have been looking at this move up to the moving average and this candle, which this candle, let's get it, let's bring it across, that bearish candle there, which sold off. And when a candle like that on the 60 minutes you might be looking at putting a stop. So you'd have entered down at the where it's closed. You might have been looking at putting a stop either at its high or at 10 pips above its high, and just pretty much just ride the trend until we get a close above this moving average, which have been down there. I need to find where I've moved that level to. Just let's put that back. And yeah, you'd possibly have done that, or you could have looked at it and said you'd wait until there's a blow off, which would have been a strong move to the downside, followed by 2 candles preceding, closing strongly near their highs. So you look at that there as a blow off candle. You would wait for the second candle to close near its high. This one didn't, so this was like a pullback. You've had another blow off there, and this second candle, which closed near its high, you'd have closed off there. And yeah, as you can see, we seem to be finding some support in around that 89.80 level, as we've touched there, come near there again, and appear to be pulling back. So in all likelihood, we will likely go and touch this and test the 90.24 level on the euro pound. So if I was doing an end of day, let's see where we are with this end of day. Yep, let's get rid of this. Yeah, let's just get rid of this. If I was looking at an end of day, well, the actual second you'd be looking at going short on the 8th, but if you were going to execute after seeing this strong pull down there, you'd have to expect move down there. You'd expect some retracement, which we seem to have had yesterday. As you can see, the market is going to a bit of a consolidation on the daily. Your daily signal would have been a couple of days ago, and we are below this moving average, this red one here, which is bearish. We've come down to this orange one, but we've closed below it, so we could expect the market to go all the way down to the 88.50 level after possibly testing there. But we've seen on lower time frames, we've seemed to be finding some support. Might just test this moving average from the other side along with 90.24 level, sell back down to the 88.50. So that's it for my euro pound position. Well, my analysis on the euro pound. I don't really have a position on there. Let's have a look at the euro yen. Now we've had some strong yen movements because of pretty much in North Korea, and let's just have a look at this on a higher time frame. Let's just see where we are. Let's just see. Let's just see where we are. Now, euro yen, it's pretty obvious that we have, this is real macro. This is, oh, there we go. This works. I'm actually doing this on a tablet. So we've had the low there in and around the 2010. We did have that earthquake in Japan, and the yen did strengthen, so a lot of countries weakened against it. So let's just have a, oh, no, this isn't ideal, but we're going to bring it across. See that. See that there like that. Bring that around. Bring that there like that. So we've had a low, a higher low, and if you look at the monthly, we are we've got strong bullish momentum. We've got candles closing near their highs, really strong candles in the sense that their bodies are pretty big. So we're coming up near the top of the Bollinger Band there. We've seemed to have found support of this blue moving average, which I'm pretty sure is my 200. And yeah, we are bullish on the euro yen on the monthly, on the weekly time frame. I suppose it would like to be the same again. So this week, for example, we're trading above its open, which is bullish. We've come into this, we've moved into this 200 period. It's provided some resistance where the market has come up, sold off a bit, and we appear to be breaking through that, and we appear to be breaking and closing above it this week, barring some fundamental news release which would either strengthen the yen or weaken the euro. We do expect to close above the 200 period. It does appear to be forming a bit of a bull flag. As you can see on the weekly again, you've got your lows, your higher lows again. So it does appear bullish on the weekly as well. We might appear, this is currently still Thursday, but we appear to be closing near the highs. If you look on the daily, let's have a look at that. On the daily time frame now, you possibly would have went long as we came down to that maroon colored moving average, as we've had the maroon colored moving average and the orange moving average converge. So that area would have provided some support, which it did, and the market moved off it. We've closed above these highs here on the daily chart. So we've had a bit of there were higher highs on these swings, but we have closed above it, pulled back somewhat, but we're expecting a further move to the upside. And if we go down to the 1 hour time frame, we're just looking for a bit of momentum on the 1 hour time frame. We seem to have sold off a little bit below this maroon moving average, and as you can see, we are looking like we are going to move upwards. I'll be looking at possibly taking a long around that 131.65 level. Around that 131, strong close above there would likely be where I'd look at taking a possible long with a stop below that 131.10 level. So that's currently it for the euro yen. Let's get back to a 240 minute chart. Yeah, there's my 240 minute chart, and possibly could have put some levels in the sense that as long as we do trade above the 130 level, we do expect bullish momentum. Let's just have a look. Should be pound yen next? Yes, we've got the pound yen. Now, we had inflation data out this week on the pound, so which was in line. It was just higher than expected, and everybody expects the Bank of England to act. Although our weekly hourly earnings were a bit down, so yeah, it is currently it's currently bullish in the sense. But if we have a look on the monthly chart, so we've had the lows around the edge of 2012. I don't know if I don't even think, because in around the 11-12 region, and obviously we mentioned the Japanese earthquake. We've had a high low here. This was in and around 2016. So we're looking at So Brexit happened around there. But if you look at the monthly chart, the pound has been going down against the yen for quite some time. You're looking at from 2015, it has been trending downwards. Brexit came, it obviously almost like the bottom fell out, but we don't really use terminology like that. So it has sold back down. We've had a strong move there, which was the 1st of November. We've gone into this bit of a range consolidation in around this region here. So on a monthly time frame, you'll be looking at close above the 148.46 level for a strong bullish move on the to the upside. In terms of a bearish, you'll be looking at below 140. Where is it? Let's just see. It's not even 140, is it? Let's just zoom in a bit. Let's just zoom in a bit. So you'll be looking at the 135 level. Yeah, around the 135. A close below, say, 135. You'll be looking possibly at bearish momentum on the monthly chart. But we do appear to be consolidating and moving upwards on a weekly. Pound yen. Let's zoom out a bit. So we've had our lows, we've had a higher low, we've had a higher low, had another higher low, but obviously we're still trapped within this range of until we close above the 148.46 level. We're still operating within this range. Now, let's just see. On a weekly time frame, as we've seen, we've had a market come down, another strong push down on that week, the 21st to the 8th, so that's in August. We've had a bullish move upwards, which is a strong close. We have had a gap down, which is like in North Korea news. A really weak week there in terms of having a small range, and we've gapped up. We are trading above the weekly open, which is bullish. This week, we're trading above the weekly open, which is bullish. We're expecting, if the bullish momentum continues, for price to get up to the 147. Let's just see, around the 147.40 level. That's where we're expecting price to go if the bullish momentum continues, which we can't see any reason why not. And that's it for the weekly. If we go down to say the daily time frame, on the daily time frame, you'd have likely went long on the 6th, which would have been last week sometime. You could have went long at the close of Monday this week. You could have gone long again as we closed above these, particularly this black moving average there, with a really strong close near the highs. Expect the momentum to continue. As you can see on the daily, seem to have had a bit of we seem to be coming off a bit in terms of having a pullback, which can be expected after seeing these two strong bullish days, Monday, Tuesday, Wednesday. Obviously, we've had a bit of a pullback, bit of consolidation. Today's Thursday. Again, likely have another bearish day, but it might just be in the case of, in the sense of having a bull found form and a move up to test that 147.40 level. So if I was looking at a daily chart, which I'm looking at a daily chart, I'll be looking for the price to come down, forming a bull flag, in the sense that once I get a bullish close, against a bullish close after being preceded by bearish candles to the downside with small bodies, I would then enter with a stop placed at the low of the bullish candle. Now if I go down to say the 1 hour time frame, so 1 hour time frame, again we just seem to have gone into a bit of a consolidation in around that 146 level. Now we've had a strong move to the upside because from this week where it's gapped up, we've had a really strong move. So as you can expect, there is going to be a rest period. So we're still looking bullish. We might even have a bigger pullback down to the 144.78 level, but that remains unlikely. But it remains unlikely. But it is there. There is some possible support around the 144.78 level on the 1 hour time frame. So I would wrap that up for the pound yen. Let's get it back to a 240-minute chart. Now let's go have a look at the US dollar, Japanese yen. And it's going to be a similar story, yen weakness across the board, so the rest of these currencies are going to strengthen against it. So monthly chart, again, we're looking at in around that 2013 region. So we've had a low, we've had a higher low. You could say this year was a nice little bull flag on a monthly chart. So we seem to have had higher lows, but we've come up here up to that 125 level and then sold back down to the 100 level, which did perform a higher low, but we did go up and did come back down to the consolidation. We've now pushed back up and now we're coming off that 118.61 level. So ideally would have wanted to have taken this candle in particular, and which was the 1st of June, or whenever that, the June candle, so it would have been in July. So in July, would have likely wanted to have taken that along around that 112 level, the monthly chart, but would have been stopped out. And yes, this market doesn't want to appear to fill out the bull flag, so it might even come as low as 106.15 around that 200 period moving average. But we do appear to be having a lot of wicks, which suggest there are buyers hanging around that 108 level, even though we've penetrated it. So let's go down to say the weekly. Because if we were to say, what would you say? Let's have a look at the monthly before we finish. Monthly, well, the monthly does appear a bit bearish, doesn't it? It does appear a bit bearish. In the context of these, it does still appear bullish, but in the medium term, it does appear a bit bearish. It does appear a bit bearish. And let's have a look at this on a weekly. Let's just have a look. On a weekly, again, you ideally want to see your bull flags play out straight away, not slowly grinding downwards. Obviously we've got a low over there, slightly higher low. We've come off the tops up there at the 125. We've come off. We've performed a lower high around at 118. And we're slowly grinding down. Now we're below this 200 period, and I think that's the 50 as well. So, but on a weekly time frame, we are trading above the open. which for short-term trades is what we look at. If we're trading above the open, we're looking to go long the market. So we are above the open, which would mean long, even though the long-term trend, we are looking for it to go down lower. If I go to, say, a 4-hour chart, wouldn't really help, to be honest. Yeah, we'll just show the gap up, like move continuing upwards. So, you know, barring you gaining in at, let's just see where would you have gotten in? You got in off that triangle there, which would have been 2 o'clock on the 11th, September the 11th, 2 o'clock on the September the 11th. Yeah, you wouldn't have had a signal since with a 4-hour time frame. Now obviously we've closed above these most recent highs, pushed up, closed above it. So I've already did analysis yesterday. So 110.90 should be an interesting level, and 111.60 another interesting level. But we haven't had a pullback yet, so we could have a pullback all the way back down to 109.80, I'd say. So we'll see how this plays out, but this will just be a bull flag, and we'll just continue our move to the upside to the 1160 level. 1160 level. That was me looking at a 4-hour chart, but I've mainly been looking at the 1 hours. So look at the 1 hour. Yeah, we've found support around that 200 period there. Again, we've come down there, found some more support, and the price is slowly grinding down, so we might find some more support around the 110.20 level. So it's over 20 pips. Waiting for a signal with this. Now, you could be looking at plus stop placement near, well, I don't know, it depends if you've got a stomach for it. 109.40. Not a lot of people probably do that, so you'll be looking at, let's just get a trend line there. Oh, it doesn't matter, I suppose. I could stick that there, and then I could just move it. So say we were to work with this area here, you could argue that you could take, if you see a long signal after 109.90 level, 109.90 level on the 1 hour chart, or you might use a momentum oscillator. Now you'll be looking at taking a long, as we've closed below this red moving average. You will also be looking at taking a long based on a bullish candle with its low closing above this moving average. So for example, this taking short here, you'd be looking at taking a short when the high closes up below this moving average with the stop placed above moving average for bearish signals. Here you'll be looking at, let's just show you what I mean. Right there, for example, you'll be looking at taking this bullish in the sense that it just depends what the analysis would have been, based on the low closing above the high of the moving average. So you would have had a small move to the upside, but you would have been profiting that trade. Now, if I go and have a look, almost finished here, I'm going to go and have a look at, I wonder how far this video is actually gone, actually. Let me just have a look. It doesn't show the time recorded. Anyway, let me just go and have a look on the US dollar CAD. I'm almost finished anyway. I've just got the gold and the oil to do. Now, US dollar CAD, as we can see, or US dollar is sold off massively against the CAD. Now, in most recent times, now if you look at this on a monthly time frame, what have we had? Well, we've had our lows, we've had a slightly higher low, and strong bullish move in the dollar against the CAD. Now, this is partly due to the fact that the oil market has calmed down quite a bit. It's come from pretty much near the 70s in the region around the $100, sort of hanging around now in the 40s, near 50. So as you can imagine, dollar is strengthened, plus with the interest rate rises, which everybody expected, being priced into the market, oil coming down, perfect storm for a long US dollar position on the monthly chart. Now, as we can see, the dollar has strengthened markedly against the CAD up to this blow off top up here, where the market has come all the way up to 146.89, sold back down off that candle, and the very next candle which preceded it was a bearish candle on the monthly time frame, which is not good. Now, it's market sold down to the moving average, pulled back somewhat, and some would argue this is this would be considered a bear flag. Some would consider this to be a bear flag, and I'm trying to get this brush to work for me. This here, but not bear flag, wedge, whatever pattern is. Now, as you can see, he did execute as expected, and which shows the power of market structure. Now we've calmed down, so you could argue that the market is going to likely find support in and around this region here, which is at 120.12 level. Now, that's the monthly time frame. If we go and have a look at the weekly, let's see where we are. On a weekly time frame, we are currently just about trading above the high. Oh, just dropped my pen right there. We are currently trading above the open, sorry. We're currently trading above the open. So, but after the strong move of this candle there, after this candle, let's see if we can open this work. A strong moment of that candle, you can expect a bit of a pullback with a consolidation, because it did sell off 4 consecutive days, with the 4th day being a strong move to the downside, which is pretty much market participants giving it their all on a weekly time frame. So we are bearish in the long term, especially on the monthly, on the weekly as well. Like, as you can see, we've broken out of these highs. We've broken out of this consolidation there. So on the monthly, we were bearish. On the weekly, we are trading above the open. So you'll be cautionarily long, which may not be the best thing in the world, because there is strong momentum to the downside. So let's go down to the daily chart, which is there. Now, the daily chart, again, you're in a bit of an area of indecision, where we've had a bullish day, bearish day, bullish day, bearish day. So, as you can see, it's might likely be a consolidation before a further move to the downside. But, so you would have likely gone long in and around. Let's get rid of that. there, because this brush is not performing the way I would like it to perform. Oh, terrible. Yeah, so we've had a as we were taking this bearish now, you could have argued that when we have had a close below the moving average, would have been stopped out there. But this candle here, close below the moving average with, I suppose you couldn't take that one either, because the actual high of the candle was above the moving average. But the fact that it closed below the low of the previous day is bearish. And yeah, there is a move to the downside. We're having a bit of consolidation. Might get a bit more US dollar strength, but it is struggling against the CAD, particularly because we've had a strong move in oil, which I'm going to show you later. If we go look at the hourly, we're saying on the weekly time frame we are above the open, and which is somewhat bullish in the short term. Now, as you can see, this is something which doesn't look interesting. We've got small bodies, a lot of not really any momentum. The moving average is flat, so it just doesn't look good for trade in either direction, to be honest. It just looks too much like it's consolidation. So get this back up to a 240-minute chart. Now, let me go and have a look at, let's see, it should be gold that's next. So if I go over to this other chart I've got here, I've got oil on there and I've got gold. So if I go, yeah, let's go over to the gold, just here. If I go over to the gold, over to the oil, and let's just have a look at the monthly. Now, on the monthly chart, as you can see, as mentioned earlier, oil sold off from that 100 level, right there, and it hasn't looked back since, to be honest. Now, there's probably a lot of people are bottom fishing after seeing a strong move around here in 2015. But as you can see, it's sold off quite a bit. And yep, went all the way down to, I think it's 26 actually. So let's have a look at this. Let's just see how low did it go. It went on as low as 26.08 on the US oil. Now it's come back up quite a bit. It's now the 149 level. Now, you could argue that with reversals aren't really reliable. But as you can see, we're in a bit of a consolidation here on the monthly chart. A bit of indecision, which isn't good, and which isn't good because we're not making new highs, we're not making new lows, so we're in a range. So, which is pretty obvious, we're in a range, so it's difficult to say where the trend is there. We are trading above the monthly open, which 13 days into the month, 14 days into the month, which is pretty much near enough halfway along, is somewhat bullish. But if we go down to the weekly, I see where we are. We are trading above the week's open, which is bullish to the short term. And as you can see the range there. The range is more prominent there. It's because we've got all these horizontal lines. But if you were to look at it, you can see it's got the range is tightened up somewhat. But yeah, we've got a range there. So with a range tightening, we'll likely get at some point a breakout. With that being the low down there at 26.08 level, we'll likely get a breakout to the upside, possibly going up to the 160, touching this 200 period moving average. So the weekly, we're we've seen the market come down, real small bodies on these bearish candles, which indicates there are some buyers there. Bears are not really in that much control. As you can see, the market's pushed up this week to the upside, which is showing a bit of bullish momentum. The 4-hourly is not really going to tell us much because I've had a look at weekly. So the 4-hourly is going to bring you back to last week, and we've had a low, higher low. We appear to be closing above these most recent highs, which were, where were these most recent highs? These most recent highs were around 49.39. Those are the most recent highs on the 240-minute chart. So we are expecting more bullish momentum. And if we go down to say the 1-hourly, it appears that a bull flag has formed. So we've come down here on the 11th, and we've had a higher low there as well. So this is what you like to see. You like to see the market push up, consolidate, pull back slightly, push up again, consolidate, push back slightly, push up again. And again, now we're in a region where it's pulled back down slightly. Strong bullish close right there near its high. And you're expecting a push up to that 149.40 level. Now, you might, as we know, oil has got a high ATR, strong range. So in terms of like a stop placements on a 1-hourly time frame, you'll be looking at, you might want to even look at all the way down to, let's just say we've got a moving average there around that 48.90 level. Doesn't mean it won't be clipped, but yes, that is definitely a region of interest. Now, if you were looking for targets, you could target 50.15 as a potential area where it's swung before. That's obviously using a 240-minute chart as a potential target. On a daily chart, you'll be looking at 50.40. That's the most obvious region. On a daily chart, oh my, I looked at the weekly, I didn't even go to the daily. On a daily chart, so we've had a low down there around the 42 level, had a higher low again. So we are pushing up. So after this great sell-off right there on the 8th of September, we've had a move down to test that moving average right there. We've had a strong close near its high. So you just look at that and thought, you know, the market is looking bullish. A second day where it's closed near its high, which is also bullish. So as we can see, markets coming up to that region there, 149.40, which is going to likely provide some resistance. And we've also got a moving average above it, around 149.58. But we're looking at targets around the 150.40 level. If we beat that, we're looking at 52.22. And that's it for oil. And let's go have a look at gold. Let's go have a look at gold. Let's see what we're doing with gold. So if we go to gold and we go to a monthly time frame, well, with gold, the monthly time frame, as you can see, we've got our highs in around that 2011 level, and it's come off somewhat. It has been a little bearish, you could say. And we've gone into this pretty much consolidation, kind of broken out to the upside pullback, and we're continuing our push to the upside now. So you could say this was our low, this is a higher low. So you could say long term we should be bullish, should be bullish with gold. I'm repeating myself because my actual pen, which I use to navigate the charts, has actually just decided to fall apart for some silly reason. Yeah, so does appear bullish on a monthly chart. Now, I'm just going to have to do without that. Now, let's have a look at, because we are above that moving average there. And so, we were trading above it, the month's open. Let's have a look at this on a weekly chart. On a weekly chart this week, we've been trading below the open, which is bearish. So we should have been looking for bearish signals on the lower time frames. So the 1 hour and lower time frames. We should have been looking at bearish signals for short-term trades. Let's just see if I can get this pen. Oh, good. So, and particularly because we've seen the price come up and touch this moving average here. So if we did get a bit of a sell-off, it was to be expected in a sense that we might get a little pullback, which we have, of the price reacting to this moving average here. This moving average was reacted to there. Obviously, we've beaten it. We've had a bit of a structure there. Appeared to be a little bull flag forming. It fell out and it went all the way down to the 1120 level. This is on the weekly chart. But as you can see, we've got our low there, higher low, again in line with the monthly chart. So you got your lows, 2016s, higher low, 2016s, 2017s. We've got another higher low because we had, I suppose you could say, that is a low there and lower low. But in this sense, you got higher lows. So we are still bullish on a weekly time frame, but in the short term, as we're trading below the week's open, we're looking for bearish signals on a daily time frame. As you can see, prices come up, had a bit of a pin bar, and it's pulled back quite a bit. But as we are still bullish, we are waiting for a strong bullish candle to continue to take it to the upside. It might even pull back down to, it would be rather it'd be rather strange, but it does remain possible that we might pull back all the way to the 1296 or the 1300 level. So that does appear to be there, but no likelihood we'll find support around that 113.14 level. Let's go have a look at any smaller time frame. On the 1 hour time frame, I was saying that you should have possibly taken this short, and this was the 8th, so that wouldn't have been relevant for this week. 1 hour time frame, you would have only got a bullish signals on the 12th for a small gain, but you would not have likely taken it because we're trading below the week's open. You would have taken possibly, let's see, what time was that? 7 in the morning. Would you take it during the European session? You might possibly have taken this bearish signal there. You would have likely lost. It would have been a fake out. You would have taken this bearish signal there on the 13th. And yeah, you would have got a good couple of bucks of that. Let's just see if you were to take that at 113.27, you got a low of 113.20. You could have got $7 out of that, even if you'd have taken the trade use. And you're currently still in it. You'd still be up $4 ish, depending on your broker spread. So in terms of looking at the short term momentum to the downside, trading based off the weekly open, you'll be looking to take short signals. And yeah, now you've had obviously the price react to this moving average up here, so it wouldn't be unreasonable to expect price to go all the way down to the 113.17 level. As we've seen, we've got a bit of a consolidation and price appears to want to push upwards. But just wait and see at the moment. As price is below the weekly open, you might push back up on today, Thursday, or again on Friday as bears take profit or bulls step in, taking it as this week being a dip and a buying opportunity to go long. So you tend to see market reversals in and around near the end of the week, really, around profit taking and people positioning. But yeah, who knows? But in reality, short term, weekly time frame, I'm looking at bearish gold. Long term, further out of weekly time frame, in the sense that it's trading below the week's open, bearish. In the long term, looking bullish on gold. And yeah, that should be it for my market analysis. I thought I could look at the US 30, which, you know, it's pretty much, as we know, these markets have just pretty much been going onwards and upwards. So on a monthly time frame, yep, we are trading above the most open. And look at that, extremely bullish. Good luck to anybody else trying to pick a top in this market. Weekly time frame, are we trading above the week's open? And the answer is a resounding yes. We are trading above the week's open, so we take bearish signals. As you can see, the market has pretty much just gone near vertical. Occasionally coming back down and touching this red moving average, but overall the market is, let's be honest, the stock market has a long bias anyway. On a daily time frame, we had a bit of a consolidation there. We've had the strongest momentum this week was actually on the 11th, was the strongest momentum this week. We've closed above more recent highs, which were 22,178. Now, 22,178. Have we gone above that this week? 22,178. 22,161. So we've not quite got up there, but we're close. We're really close. And so yeah, we're looking bullish on the US dollar. Well, not the US dollar, on the Dow 30. As you can see, this week from the 11th, this is based on the 1 hour time frame. Markets pull back up with a bit of consolidation. Moving averages are contracting on each other somewhat. So we're still expecting more momentum to the upside. Well, we'd like to see a bit more of a pullback. A bit more of a pullback on it. But yeah, we're still bullish. Still really bullish. Now let's get this down to a 240-minute chart. And as you can see, it's pretty obvious from looking at this structure. So you've had a low around there. It's had another test of it. Had a higher low. Had another test. So it's kind of like double bottom. And the market's moved up. Pushed through these moving averages strongly. Pushed above this more recent high in around that 22,028 level. Just pretty much blasted through that, and it's up here consolidating, having a bit of a rest. We might see some profit taking, seeing a pullback, but that's currently what I expect from the US 30. And yeah, that should be it for the old analysis.